The following examples won't focus on one single type of candle pattern, but rather an assortment. That way your mind will be able to practice a wide range of candle charting situations rather than focusing on one single type of candle pattern. In this example, Snapchat begins with a good demonstration of a stock that has just been listed on the stock market following the IPO, an established downtrend that has been accelerated due to the recent gap down. First, an inverted hammer, then a bull hammer, pointing to slowing down of the downtrend and some bullish influence, especially with the longer lower wick, and as usual there is a higher possibility of downward overextension due to the gap down. Since there is no strong close above the bull hammer's high, the sideways range is very natural, especially as selling pressure also significantly decreases, taking the market into a more neutral phase. There is hesitation and fear at this key support zone, which is from the $10 boundary. Its critical stock price remain above $10, which is just a key lower boundary since it is a nice round psychological number. A strong barrier does indeed form, and this avoids a downward continuation that would have occurred if the market breached below $10. So instead of this being a resting phase in a downward continuation, it is a normal gap down range that is eventually surpassed with the steep incline that still encounters natural opposition approaching the gap fill area, making it very normal to see the bullish influence begin to diminish in the price action of bearish stars, along with some indecision, especially from this large doji. This upper boundary centering around the $14 level remains firm, and the close below the doji with increasing bearish volume changes the market sentiment to a decidedly bearish to neutral tone at this contentious area. There is some delay in the seemingly inevitable downtrend due to bullish influence that remains from this steep incline. Notice here when the uptrend begins to weaken, the candles still remain overall green, and the bullish volume is still consistently above normal levels, indicating more of a gradual slowdown of bullish sentiment rather than a strong bearish reversal. And this candle, even though it's red to confirm a strong close lower, it does have a longer lower wick, not in a context of a bull hammer for an upswing, but showing the market is unable to firmly push below the short-term $13 boundary, which ends up stalling price for several weeks. It is indeed a case where there is more of a gradual shift from bullish to neutral to slightly bearish, increasingly bearish, at a very strong resistance area. In most cases, if there wasn't such a bullish background, there would be a more immediate downward reversal. Prior to direct contact with the 14 range, Snapchat was held up, but experienced major resistance, and when there was eventual direct contact, there was strong upper wick rejection, even for dojis. Around this time, there was a significant decrease in bullish influence that was seen earlier, finally leading to a sustained downtrend that had periodic bearish spikes. As usual, dojis emerge during flatter areas, and there are some bullish reversal candles. However, they aren't strongly confirmed, or the market doesn't follow through to strongly close above them. For example, this piercing pattern does have the next candles close above it, but it is not strong as seen by the normal volume that eventually goes back to a bearish stance to continue the broader context of a downtrend. The key turning point back up was from a bullishly engulfed bull hammer. It was an upswing of decent strength at first, not exceedingly strong, more of a gradual rise. This is mainly due to bullish volume not being exceedingly high at the beginning, but rather remaining consistent at normal levels. Though that was adequate to begin the upward reversal, especially after the market became overextended following a sustained bearish period. Bearish volume and price action became consistently lower. There were some periodic spikes, especially at the beginning, but they became too infrequent to have a significant impact on the market that now demonstrated the reverse with a sustained uptrend that had frequent bullish spikes. As would be expected, there is some opposition reapproaching the 14 range. However, there is adequate volume in the lead up to finally surpass this level once again, and there is a clear consolidation. Stock price dips back down twice to hold at this now support range. A great example where a bullish reversal is accelerated by a gap up. Another example where bullish candles at a major support range don't lead to an upswing, but rather slow down the overwhelming downtrend. In the process, this essentially creates a resting phase in a larger downward continuation. Later, the opposite occurs when the 14 range offers resistance and a minor downswing. However, this is merely a minor delay in an upward continuation. This is such a strong bullish move due to the gap up, which is also sustainable because there is a consolidation here that doesn't directly contact 14, but instead manages to have a series of minor downswings to stabilize the bullish surge. This leads to a strong but stable uptrend, which has more continuations follow. A bearish engulfing does slow down the climb slightly, however it is quickly opposed when the next candle is a strong bull hammer, and that leads to a sideways range rather than a traditional bullish reversal. This ends up being more of a resting phase in a bullish continuation that is called into question once again as a harami emerges. Bearish sentiment increases significantly after stronger closes under the harami's low, along with increasing bearish volume. However, bullish price action remains as bull hammers appear yet again to delay a developing downtrend. This turns out to be a good demonstration of a downtrend that is being slowed down by the support offered from the resting phase of a previous upward continuation. Indeed, this turns out to be a significant support that manages to hold despite the significant bearish pressure that remains, especially towards the end of July and the beginning of August. From a longer-term context, this turns out to be a very steep but strong uptrend that is also stable due to periodic bearish to neutral ranges. These ranges help prevent upward overextension. Along the way, we can also see Snapchat stock price has returned back towards the IPO range. 2650 is a nice round number that also happens to be very close to the opening price of a bearish star that produced the first significant downward reversal. Given these factors, it will be quite natural for the market to return concentration at this pivotal early price range. 24 will also be a highly significant price, especially as it is the actual IPO price. The established uptrend continues with strength into September to recontact this IPO range. Volatility and resistance was also particularly strong here for a few weeks due to this also being the range of a recent downswing. Regardless, the bullish sentiment remains. Volume is not exceedingly high as it enters the 24 to 26.5 range. However, it remains consistent and at near normal levels to gradually surpass this IPO range. After that, there was a minor consolidation that essentially saw stock price remain flat prior to the continual reach for newer highs.